Hello everybody, a very, very good morning to you and welcome back to a brand new week in the markets in these very uncertain times at the moment, but hopefully with the volatility we've got at the moment we can find some good trade ideas for this week. So this is obviously our Monday stream, which means we're going to be looking at what are the top events and the top trade ideas, in my opinion, for this next 5 days in the market. So there's lots to cover from a technical analysis point of view, especially on the stock market. I really want to provide some clarity about what happened late on Friday night with after the NFP. I had a bit of an issue with the mic last Friday, so I do apologise about that. But the NFP print was it was a bit weak actually. It was on the weak side, I think, to be honest. The unemployment rate ticked up higher, and we saw the jobs numbers, although better than last time, they were still sort of on that trajectory to the downside. So I don't think that helped things. I still believe that we still have a fairly risk-off mood at the moment. So we'll see if that does continue this week. And I think we're at a really important inflection point actually in markets at the moment, with where the stock market is currently positioned. Good morning to you, Lara. Good to see you. I hope you're doing well. And I did see your oil analysis. Maybe we can look through that as well today, because I wanted to give that a proper read, because I know you like to trade your crude oil. I know you're looking to go long, right? You're looking for a reversal. So we'll see if we can get that. And hello to everyone who's watching on catch up. I know it's a Monday and it's fairly early for people, so I imagine that most people will be maybe watching this on the catch up. So where should we start? Should we start with, let's start with some technical analysis first on the stock market. Start with the Nasdaq, and you can see what happened on Thursday through to Friday was that we really had a quite a big close below the 200-day moving average. So I hate saying this, but I'd actually think that potentially we've now turned bearish in the US stock market, in the Nasdaq tech stocks, for example. I'd say that very, very. I don't say that very often. So when I say that, it's again, and the reason is because look, the last time that let's ignore that, because we can call that actually support around the 200-day moving average. The last time that we traded below the 200-day moving average, like the first time it happened, was back in January of 2022. And we know what happened to the stock market in January 2022. We had a correction of 28% downside the last time we traded below the 200-day moving average. And I know that shouldn't be used to determine what will happen in the future, but it shows you, at least tells you that the current situation is a tense one, right? What happened, you can see, is that when we got these, when we had this previous 200-day moving average, it was a great support area previously. And when we broke below it, you can see how it became a really nice resistance area. Once, twice, then a big move lower, then a big rally, probably everyone buying into it. Right, look at that. That's why I don't ever use the 200-day moving average, only on the daily time frame and on the stock market, on the indices. What followed there, and look, you can see how we then respected it. Now, what I'd prefer to do is stay patient and wait for it to come back above. Which, if I zoom in here, you can see what happened. I know this happened before, and I'm not saying it's different time, different etc. But I'm just saying that if or when we do get finally a breakout back above, which I'm sure we will, obviously at some point. When we do get that break back above, look at the retest, look at the opportunity after that to potentially go long. We get 1, 2, 3. It becomes a potentially good swing trade idea. Then look, what followed after that. You see how much upside we can get potentially. So that's why I'm actually, again, look, I'm quite liking the fact that we're seeing this pullback in the stock market, because I think it's healthy, right? It's a healthy pullback. We're currently at good morning to you, Fataya. Hope you're doing well. Thank you very much for the message. We're at about 11% from top to bottom at the moment. So we're definitely in correction territory. And I think once you start exceeding 10%, I think you're starting to approach a short-term bear market. So my idea for people this week, if you want to continue to play the risk-off momentum, is what I would look for potentially a swing idea which looks maybe a bit like this. Something that looks like that. Right. Obviously, the take profit is a little bit undefined, so you just sort of, I think we'd have to manage our risk as we go. Now, I have to say this is probably the first time since the beginning of 2023 that I've been even tempted to try and short stocks. Now, what I want to see in order for this to give me confidence is I want to see this to be echoed on the other stocks as well, the other indices as well. This was a trade that I potentially marked out, saying that this was the low. I don't need to mark that now. You can see that's 200-day moving average. Look at the S&P. The S&P is like, you can see how much of a mess it is around this area. And we did breach this demand zone. You could class it as a liquidity grab. We actually haven't had yet a full candle closure below this 200-day moving average yet. Because you can see that on Friday, we were down big, right? But the buyers stepped back in late. We actually closed back above. Then, when Monday opens up, we gap lower. It's a mess, right? It's really difficult to try and predict. Which is why I'm sitting on the fence a little bit more at the moment. And I'll wait to see if we do get a closure below it today. Because if we get a closure then below the S&P 500 200-day moving average today, that could then open up some opportunities going forward. Curtin, hello to you. Good morning. I hope you're doing well. Thank you very much for the message. Okay, so that's sort of some ideas that are on the sideline there. The US 30 is a little bit different because you can see if we're going to play more upside, you can see that we're actually still above the 200-day moving average on the US 30. So if you're a bull in the stock market, I think the US 30 is obviously your best pick. And I think if you're a bear, I think you need to look to tech stocks. Technically, that's what's telling me what we should be looking at for this week. So I'm going to keep an eye on that one because over the next couple of days we may see a trade opportunity emerge. Okay, in terms of the economic calendar for today, or this week, should we say? Monday, GDP data out of Japan. Important if you're trading the Japanese yen, to be fair, because if we see GDP going up in Japan, I think that's going to continue to feed into some Japanese yen strength, potentially. On Tuesday, if my laptop wasn't crashed, on Tuesday there isn't any high impact news events. It's Wednesday. That's the big one. US inflation. We're expecting US inflation to fall down to 2.9% from 3%. If we see a slowdown in US, this is the biggest event of the week, by the way. US inflation is the biggest event of the week, for sure. If we do see US inflation fall more than what the forecast is predicting, it's going to feed into this whole recession narrative, I think. We're at that stage now where we're starting to see the data start to tail off. I still think it's okay, but it's in muddy waters. If we see inflation falling off a cliff, that's going to be a big signal that there actually is more of a materialistic slowdown coming in the US economy. If we see inflation ticking higher, I think that's when we potentially get that US dollar relief rally, which is massive. I just think the dollar's massively extended to the downside at the moment. So we could see this week being a week where we have some sort of pullback, particularly on like euro dollar or pound versus US dollar. On the same day, we've got the Bank of Canada interest rate decision. We're expecting another cut from the Bank of Canada. So I'm thinking we get a cut from the Bank of Canada, we get a slightly higher inflation print than what's forecasted. Or even just one that's 3%, even what's in line, just a steady fall. Anything that doesn't cause any more panic. I think then we could be looking at potentially some dollar CAD upside this week as well. So that's something I want people to focus on. And I'll look at the charts in a second. On Thursday, we've got PPI out of the US, so that's basically your services inflation. Not as important as CPI, but again, still something to watch out for. And then as we head into Friday, we've got some inflation data out of Germany and the Michigan Consumer Sentiment Index out of the US. So overall, the majority of the volatility, like it does in most weeks, but especially this week, it's going to come when that around that US inflation, the 24 hours leading up to it and the 24 hours after that. That's when we're going to see the majority of the volatility. Okay, so when it comes to the US dollar, we did have bullish divergence. This is I tried calling some dollar upside here, and I still I stand by the analysis, but I was obviously wrong because we got a much broader move. I'm not someone who uses fibs that often, but this is a weekly fib. Look at that. Right on this 61.8% weekly fib. Is there support coming in for the dollar soon? Look at that week on the downside. Again, what I'd suggest is obviously as you go down the time frames, you could probably argue that, you would argue now that we've seen enough evidence of us being bearish on the dollar. So I think this week could be a technical pullback. Where can we? It's a very difficult trade. I think I'd rather wait, and I think if we do try to buy some dollar longs this week, you can actually see we're probably at a demand zone here as well. It's probably got to happen now this week, to be honest, and I think that what we might see is it might be a bit of a tough one. We might see something like this. Whether we then get another leg lower or whether the weekly fib holds and we blast higher is yet to be seen, but I believe that either way we're good for potentially a counter trend pullback. So I'd always half my risk in that case. I would never put full risk on a counter trend trade. Now in terms of the market, which I think we could see that from, I'm looking at euro dollar and I'm saying, right, if you look at this, obviously this massive explosion to the upside last week, you can see now we're at an area of resistance for me around this 1.09, right in this supply zone, right into this fair value gap. So I think we could be good for about a 200 pip drop. Now if I drop that down to the 4 hour, you can see we've got a little bit of a liquidity grab up here as well. And look at the RSIs as well. Not that I use RSI too much, but I think again it's that thing where, yes, is USD Swiss franc. You mean, Fatai? I'll have a look at that for you. So that could be a potentially good selling opportunity. But what would the sell look like? If you wanted to place it now, it would look like this for me. So about 5-1 risk versus reward, something like that. USD Swiss franc. Doesn't look great, to be honest. I think we're at this last bit of support down here. Probably our last order block down here. So you could argue, again, yes, it's not a bad thing. It could be a good trade opening up here. And what I like about this as well is you see we never actually took out this high, which makes that a good liquidity target. So these are potentially swing opportunities that I'm giving you. So that's another one. And the other one, no, I think that's the pound versus the US dollar as well is probably not the best one. Not really in any area that I'm focused on, to be honest. I like the dollar Swiss play, but again, I've got to say you are calling bottoms here. It's difficult to do, so you might want to wait for some more evidence. It's only Monday. We might want to see a bit of an uptick in US inflation. We might initially see, because I doubt it's just going to do that. Obviously, markets moving trends. We might see something like that. So as a swing trade, I like it. Maybe as a 0.5% risk on both and just let it run for a few weeks. See if we do get that dollar rebound. And the other one that I wanted to have a look at, which is a trade that I've actually placed myself. So this is one of my trades that I'll put in the journal. Is this euro versus Japanese yen? It's a trend rider trade. So we've got a bullish crossover, multiple retests of the EMA 12, EMA 36 gap as well is 0.58%. So this is basically the trade that I'm looking at now. So when I go to my trading journal, I want to show you of me actually putting that trade in. So the date today is the 10th of March. We're long. Call it 159.9. No exit price yet. Strategy is H4. Trend rider. This perfectly followed the rules here. I'm happy with the entry. And the actual ADX indicator is below 40, which is a sign that there's room for the trend to build. So if we do get a move higher sorry, I can't see it. If we do get this move higher, so you can see we're right around the entry point right now. So that's another trade that this is the trade that I'm actually in, and I'm going to look at potentially this USD Swiss franc trade as well, but as a low risk. It's a low risk one. Okay, right. So let me post that. Let's see how we get on with that. Trade ideas. This is Euro Yen from the live stream. Okay. And yeah, good to see everyone posting their analysis as well in the trade ideas section on both Discord channels. So we do have some exciting news with the competition today. So obviously it's Monday, which means we will be announcing the winners of our current giveaways. So the next batch of winners are going to be announced today over on the Atmos Discord channel. You should be able to, if you're not in the Discord channel already, the link should be in the description for you to join. So as we said, we're giving away in total $1 million worth of challenges. So today, every Monday, is the fresh batch of winners to be announced. So make sure you're tuned into the Discord channel today, and hopefully good luck to all of those who are involved. And if you do want to get involved into the next one, all you've got to do is enter your email address at kickofflabs.com/giveaway/Atmos giveaway. I've put the link in the chat for you. Okay, so to summarise, I am long Euro Yen. I think there's a potential for maybe a swing reversal in some of those overextended dollar markets. Stock market looks increasingly concerning for me. If you're a bull, I like the Dow. If you're a bear, I like the Nasdaq. S&P 500 sort of sits somewhere in the middle. I think whatever way it swings is the way I'm going to go. So we'll see how that goes over the next few days. US inflation, massively important today, Wednesday as well. And that's going to be the main event of this week. Okay, good stuff. I will be around if anyone needs me throughout the week in the Discord channel, so feel free to come and join me. Until then, trade well, trade safe, good luck this week, and I'll see you all for tomorrow's stream. Thank you.